All right, hello community. Thanks for tuning in. I am Mark. I am the stock market jobber. I am also the head of the Benzinga Trading School, which I really think you should check out. You know what? I was watching a show from Australia, and you notice how they people in Australia always end their sentences with a hi like thing, like they're asking a question. So I'm like, I'm Mark. I'm the head of the Benzinga Trading School, blah, 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 blah. Anyway, I'm not Australian. I'm just a dude from Connecticut. So let's go through the market. And I have nothing bad to say about Australia, by the way. I actually have a lot of friends who are Australian. It's just one of these like little speech things. All right, so what are we going to do? We're going to go look at the S&P 500 first. Now, believe it or not, wow, wow, look at that move. Man, that has got to be some panic buying. I was just gonna say before I saw this move, my modem was out, my cable was out. I had to get a new modem, so I haven't even looked at the market today. Wow, that is a move that is just like saying, hey, there's probably going to be a reversal. All right, so anyway, let's look at the S&P. So we're extremely overbought. Overbought means we're trading at like an extreme above the typical or usual trading range. This is important because overbought markets draw sellers into them. There are traders who are going to be expecting a reversion to the mean, and they're going to come into the market and they're going to, their sell orders may push the market lower. But this is, it's amazing, right? The first day in like 5 years, I couldn't see the market because my cable was out. We have a move like this. But this just begs for a reversal. And I'm not saying now, okay? As you know, if you're one of my students, or as you should know, we don't take positions just because something is overbought or oversold. We take positions when we have a reversal. We don't care about catching the bottom of their top. No one's ever going to do that. The greatest traders in the history of mankind cannot catch the bottom of their top. We're here to make money. We're not here to be perfect. So, we're just going to watch the market. We're going to let the market tell us what to do. It's fun to have an opinion, right? It's fun to say, oh, I think the market is going to do this. I think the market is going to do that. But opinions are a very dangerous thing for traders because they put you in a psychological mindset where you may ignore things that you shouldn't. It's like a classic case of confirmation bias. All right, anyway, so here's our S&P, extraordinarily overbought, I would say. I think I'm going to be looking at this for a potential reversal. So please check in tomorrow morning at our morning live stream around 8 o'clock, or well, not around, but at 8 o'clock. All right, let's just going to go through these sectors here. So there's 11 sectors in the market. Sometimes different ones are in control. Three of the sectors are utilities, materials, and real estate. They're all small. They're all less than 2.5% of the overall weighting. But technology is like I think 28%. Financials are 15. Healthcare. If we look at the sectors, we can get an insight into what's going on in the market. So we got some extremely overbought conditions. Let's see what sector they're in. First thing I'm going to do is I'm going to look at the Spider Technology ETF. Okay. Really being extended here. I don't know if this is end of the year stuff, but as a trader who's been doing this for 30 years, I will say this. Moves like this, I'm not saying the market's not going higher in the next year or so, but when you make a really rapid move, there's always going to be some profit taking. All right, Apple. We're going to look at Apple, biggest stock in the market. Yeah, overbought at resistance. We got to watch this. Okay, Apple is the biggest stock in the market in terms of market cap. It's 8% or 7% of the S&P 500. The S&P 500 is 500 stocks. Apple is 7% of that. Microsoft is a thing about 7% of that. So these two stocks account for about 15% of the market. And as we can see here, Microsoft really didn't do anything that special today. I'm just going to go back to Apple here. And Apple was really ripping higher. This could be a potential flight to safety, which is a bearish thing. What is a flight to safety? Well, it's when like people are like, ah, the market's going to go lower. I got to sell all this other stuff. But I'm going to go buy something that's safe. In the old days, it was like gold, right? Now it's like, man, what is safer than Apple? So if you're long Apple, hang out, stay with it. As traders, the trend is our friend. And it's an old saying, and it's true. It's like Newtonian physics. Like something is going to go the same way until there's an opposite, effect or whatever. So as traders, we don't want to have an opinion. We want to let the market have the opinion. And the market will tell us what to do. The market is never wrong. You're wrong. I'm wrong a lot of times. The greatest gurus on Wall Street are wrong. You know what's never wrong? The market. So, just a couple quick thoughts here. If I was going to be playing a reversal, well, you know what? If Apple reverses back below this important level, maybe that's the start of it. Maybe Apple keeps going higher. Maybe it reverses at a higher level. That's what we're watching. We're going to watch it, and if the reversal happens, we're going to take a position. If not, we're just going to sit in there and watch it trend higher. Okay? All right. Second biggest sector is healthcare. And I'm doing my Australian thing again, right? Healthcare. Now we're going to, wow. Wow. Jeez. I've been a trader for 30 years, man. This is very unusual action here. Wow. I would be willing to bet that there is some kind of massive reversal about to happen. Wow, look at that move. All right, so this is our healthcare sector. Let's just go back over the last, over the last year. I'm going to go click 1 year. There is nothing in the past year that is even close to this. You get moves like this at 2 times, generally. You get moves like this when a market is coming off a bottom. And you get moves like this when the market is coming to an end. You have aggressive buying at the beginning of the trend because that's the quote-unquote smart money. They were the first people in. You have aggressive buying at the end of the trend because those are the people that are the last people to the party. They've been watching. They're like, I can't wait for the price to come back down. I'm going to get involved, blah, 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 blah. We're very overbought here. Everyone, I think you guys got to check back because I think we're setting up for some pretty, I would never guarantee a profit because I'm no psychic, but what I've learned over the years is like when you get it, when the market's about to move, that's when you got to pay attention. Seems to me like we're about to make a pretty significant move. This is like almost absurd, these moves. All right, so that's healthcare. Let's look at our financial sector. There's another absurd move. Wow. Boy, it's amazing. It's like the one day where my cable goes out. There's all this stuff going on in the market, but everything closed on its highs. This almost seems like panic buying. Panic buying pretty much tends to reverse. But like I said, you let the market tell you what to do. Now look at this. So our financial sector is at a former resistance level. Markets tend to run into resistance at former resistance levels because there's people who bought up here who went underwater when it fell out of bed and they want to get out. So now it's back up to their price and they are trying to sell to get out at break even. Extremely overbought at resistance. I'm just going to go review the healthcare sector again real quick. Same thing, extremely overbought at resistance. So if the market reverses, and I think there's a really good chance it does, there are ways to make money on the downside. Okay? You shouldn't hold your head in the sand or put your head in the sand. A lot of ways, times it's easier to make money on the downside because markets go down faster than they go up. And I don't even know what the hell is going on here, everybody. I've been doing this for a long time, and I mean, this is like pretty strange behavior. Um, but we got to let the market tell us what to do. And here's the thing: you don't take the position until the reversal happens. This thing could go another 20 points. Who the hell knows? I don't know what's going on. I'm not that smart. But I do know that markets that have action like this tend to reverse. So that's the S&P. Just going to run through a quick couple other sectors here before I hit the road. Well, consumer discretionary, ripping. There's the industrial sector. This is ridiculous too. Wow. All right, so make sure you check back in because in my opinion, there are going to be a lot of opportunities on this short side here. Okay. Now that doesn't mean you need to short stocks or go short. I would, as a newer retail investor, and even as someone who's more experienced like myself, I would never short a stock because the risks are too high. I would buy puts if I think something is going to go down because the most money that I can lose is the amount I put into it. All right, we're going to look and we're going to wait for a potential reversal. We can look at some of these inverse ETFs, in other words, ETFs that go up if the market goes down. This right here, the ProShares S&P 500 ETF, this is the opposite of the S&P. So if the S&P starts going down, if it's down by 2 or 3%, this will be up by 2 or 3%. If you want to get really, if you're really if you're really compelled and you really think that we're going to have a reversal, which I do, you can look at this. This is the S&P 500 bear 3x. This means it will move approximately 3 times in the opposite direction that the S&P moves. So SH moves about the same. This one moves about 3 times. So S&P goes down 2%. This thing's going to be up about 6%. All right, everyone. Thank you so much for checking in, and I will see you tomorrow. And make sure you check in because sometimes the market's quiet and it's best to be on the sidelines. But there's some pretty strange activity going on today. And my guess is that over the next few days or week or so, there's going to be some low risk moves where we can, make some coin here. All right, everyone. Thank you so much. I will see you soon.